Hey kids, so you may have seen that mortgage rates actually went up after the Federal Reserve cut the Fed funds rate by 25 basis points. So I asked Google Gemini if they could give you an explanation. So here's the explanation. Mortgage rates went up, or at least faced upward pressure, because Federal Reserve Chairman Jerome Powell's comments dampened expectations for future interest rate cuts. Here is a brief breakdown of the key factors. Mortgage rates in the 10-year Treasury. Mortgage rates are not directly set by the Federal Reserve's benchmark rate, the Fed funds rate. Instead, they are closely tied to the yield on the 10-year Treasury note. Market expectations. Financial markets had generally priced in the likelihood of a rate cut by the Fed yesterday, and were also anticipating further cuts in the near future, like the next meeting in December. Powell's caution, even though the Fed did cut its key interest rate yesterday, Powell's statements during his press conference struck a cautious and less accommodative tone. He specifically said that another rate reduction at the upcoming December meeting was not a foregone conclusion, far from it. The result, when Powell signaled the Fed was less certain about future rate cuts, citing factors like elevated inflation and a challenging economic look, it caused the bond market to react. Investors sold bonds, which drove the 10-year Treasury yield higher. Since mortgage rates follow the 10-year Treasury yield, the upward movement in the bond market put upward pressure on mortgage rates. In short, the market perceived Powell's comments as being less dovish, less inclined to cut rates than expected, which caused long-term interest rates and therefore mortgage rates to move higher. So this is what we've talked about before. In the month leading up to the Fed meeting, the rate cut is baked into the mortgage rates already. The lenders basically factor in what they expect the Fed to do, and then they react to the comments about what is the future of rate cuts, rate hikes, etc. So this is adding uncertainty to the market. So what Jerome Powell did by saying that the December cut may or may not happen increased uncertainty into the market, which then caused treasuries to skyrocket, which then caused mortgage rates to go. So this is how all this is tied together. When there's uncertainty in the market, the bond market goes up. It needs to provide higher yields to those investors to attract buyers, and therefore the 10-year Treasury pushed mortgage rates up. So give me a call, shoot me a DM if you want to talk about this, or get on the path to home ownership, because this is the time to get in. When others are uncertain, you jump. Give me a call, shoot me a DM. It's time to get you into your dream house.